focus. Jefferies is anticipating further supply of equity to the tune of $60 billion to $80 billion for the remaining 9 months of the current financial year, led by marquee IPOs, disinvestments and QIPs on the anvil. Hormaz brings us all of those details. Over to you, Hormaz.
Well, $80 billion is the kind of equity supply that Jefferies is anticipating over the next 9 months of the current financial year. Now, over the last 2 months, the market has seen a significant rebound from the lows that we had made in April. And what has that resulted in? It has resulted in this return of supply of equity, be it block deals, be it QIPs, be it more IPOs. And as many as $17 billion worth of deals took place in the month of May and June, of which $10 billion took place in the month of June. Now, that is according to Jefferies. What they also say is that this monthly run rate of $8 billion is even higher than the peak that they had seen in the second half of calendar year 2024. Now, what led to this move in May and June? It was mostly promoter exits and PE exits that took place. Almost 75% of that is to these two categories, and of course IPOs and QIPs compiling the rest. Now, why they say that this kind of supply is still anticipated in the market, and that is because almost 65 IPOs, according to Jefferies, are still awaiting regulatory clearances. Now, for the first quarter of FY26 itself, we have already seen 56 DRHPs being filed. That is almost a quarter of the 211 that were filed in FY25, and that is why they believe that this momentum is likely to continue going forward as well. Now, expecting IPOs, where are they anticipating? In areas, be it internet, capital markets, telecom. They're expecting QIPs to take place in the financial sector, mainly in the PSU banks. If you take a look at the sectors as well, the telecom sector, they're expecting equity supply worth almost $15 to $20 billion, anticipating that big Jio IPO as well. For the capital markets, that big NSE IPO, that can lead to a $10 to $12 billion supply, along with other issues as well. For the internet space, they're seeing some more e-commerce IPOs, PE exits taking place. That can contribute another $10 to $12 billion of equity supply. For the banks and the PSUs as well, anywhere between $4 to $8 billion, some more supply coming in for these segments as well. So as a result of which, they are saying that it is this kind of supply that may put a lid on the near-term returns of the market, when there is some bit and actually quite a large amount of paper that is still lined up for the rest of FY26.
Well, interesting data there, Hormaz. We'll have to wait and see whether or not such a massive supply gets absorbed in the market. But